I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go ahead, sleep.
Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options. She's going to look at an option trade setup in AMD. I'll bring you a hot minute in NVIDIA, and Arvi has a trade idea using our ranking systems. You must watch this analysis on Win. Then I'll bring you my analysis on the stock market, and we're going to look for some leadership in the mid caps and a very overall negative situation for the stock market. Hi, I'm Steve Miller. Call me Slim. And this is the Slim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market was under steady pressure last week as investors responded with their wallets to steadily rising interest rates. Happy to sell, raise cash, and put that money into the safety of money markets. In fact, it was a week when almost everything fell, except interest rates. China continued to weigh on the markets. They have huge economic problems, especially in real estate, with now Evergrande, their giant real estate company, filing bankruptcy here in the U.S. You know, their real estate has been killed in there. Let's call it their fake real estate, as they just built and nobody living in the properties or shopping in the malls. And as rates go up, those pieces of property get absolutely killed. They have to support them with no income coming in. And you know what that does? That actually disproves the Keynesian way to look at things, that if you pay somebody to dig a hole, then you can just pay somebody to fill the hole and then just print the money to pay for all of that. Well, that doesn't work, and that just builds bigger debt, and you can see the problems that are going on right now. Russia also huge trouble. The ruble's plunging, and they've raised interest rates this week. They raised it 3.5% to 12%, trying to hold up their ruble, which has been collapsing. Here in the U.S., retail sales showed strong, and the economy, while soft, is still growing. The FOMC, they're paying attention, and their minutes were hawkish. They said that the economy is resilient and wage growth is high, and there is significant risk to the upside to inflation. I warned about this months ago, that there was no pivot coming in 23, and when they try to do so in 24, that might be quite a few months into 24, they're going to find out that the rising commodity markets that happen are going to be a problem for them, and they're going to end up not being able to cut rates very far, and who knows, they may be raising them again later in 24 after trying to cut them. As the bond market moves down, it took everything down with it: metals, oil, Bitcoin. In fact, Bitcoin on Friday collapsed. It was trading up in the 29,000 area and then started to erode down for a couple days, and then it collapsed overnight, getting very near 25,000. And now rebounding here on Friday off of those lows, trading around 26,000. And if you followed our analysis in FutureSpeak that Arvi has brought every single week, we have shown you that that has been negative, and we were looking for downside. The dollar, in the meantime, stayed firm as money flows towards the higher interest rates. And our original bond market analysis looked for about a 4% peak in the 10 years, which didn't happen. And what we see right now is that, even if we get a decent bounce in treasuries, it does look like that market still is in trouble. In fact, extremely huge borrowing needs from the government is putting pressure on yields, along with the economy that's holding up. And it looks more like a resumption to the bond bear market that began in March 2020 than anything, and probably going to see a range in the 10 years of around 390 to 4.4 over coming months. And that is us upgrading that interest rate range that we have had. For banks, that's really bad news, and Moody's has come out and warned that there are more downgrades coming in banks. This wasn't good news for the market, and it responded negatively to that. Important lows for the bond market in our analysis are not till mid-24. So we think that these bounces will come and maybe last for a few weeks and then move to the downside again. The tape watcher in me, and I've been watching tapes for 50 years as a trader, and that's basically what I did when I first started trading, is all we did was watch the tape coming across and always watch the bond market. And what happened in the past was that when the stock market fell, that brought in bids in the bond market as there was a flight to safety. Well, we saw in the last downside move more than a year ago that 60-40 investment in the bond market and the stock market, that balance didn't work because they both fell. And we're getting some more of that right now. There's no bids that have been showing up in the bond market at all when the stock market moves down. There are no safety bids coming in, and that is a big issue because if the bond market stays weak, the stock market doesn't like it, and investors are going to keep moving money into areas where it's safe. Why should you invest in stocks that are trading at historic high valuations when you can get 5.5% in money markets? It just doesn't make any sense, and that's why the stock market is having trouble. If stocks do fall big, and that is a possibility, we think that will change temporarily, and money will move into the bond market, and we'll see treasuries move up in that safety bid, which probably will not last. For the stock market, the short-term phase that we anticipated, that we thought there would be a rally and a selling opportunity, did not materialize. Downside pressure is so significant, and I'll show you that in the analysis coming up, that it was not allowing that uptick that we were looking for. That's kind of sad because we were looking for some opportunities to sell, and I've gotten some emails and comments from people, some of them not so nice, that said, where was that rally? Well, when the market's that weak, it just doesn't happen. That does give us a warning, and that the magnitude of this drop in the stock market in this forecasted period of risk is saying that it could be greater to the downside than our original 6 to 8% decline that we were looking for. We're not looking for a low in this decline until sometime around mid-October. And we see that the alignments in our work right now say that the market in that 8 or 9 week period ahead could have a decline that anything could happen in. We never want to be an alarmist or a doomsayer. That's not our style at all. Still, we see the potential for a 13% drop in the stock market. We have been warning to reduce risk, and you've heard that here in this exact spot in every one of these weeks in these last several shows that we've done. It's not too late. The stock market down now, just under 6%, 13%, well, maybe that's where it's headed. I kind of think so, but it could be worse. This week for the major indexes, they're down about 2 to 4%. The Russell was the worst, and that's because of these low-cap banks that are under risk based on these higher interest rates and the very likely coming Moody's downgrade. Bond market, 30s, they lose 1.5 points. They're gaining almost a point here on Friday, so it was a lot worse. And the 10-year yields, they gained 6 basis points. They're around 4.23. They made a high of 4.32. Gold down $23 and silver around unchanged, those both under pressure from the higher interest rates. The dollar benefiting from the higher interest rates, and 5 weeks in a row it advanced, this week up about 0.5%. And those rising yields, if they keep going, they're going to keep the dollar firm, though we believe strongly that coming sometime in some months, the dollar is going to get a big hit. Oil down about $3.30. It was a strong market, and we were looking for a correction, and now we think that correction is going to last until late September. We'll probably see it get under $76. You can see all of our analysis on all of those commodities by watching FutureSpeak every single Wednesday RV, our expert analyst, cycle analyst, does a fantastic job on that, and you just have to be a level 2, 3, or 4 member to watch those the analysis on those 24 different futures and stock indexes in weekly and daily charts showing our cycle analysis. I'm sure you will love it. Make sure that you go to the AskSlim website and explore. Look around, get acquainted. If you want to sign up for level 1 for $45 for 3 months, you're going to get information on the indexes every single day. So level 1 is a great way to enter into our world. YouTube, subscribe to the channel, click the notification bell so you know when we put videos, and give us a thumbs up on this video. On X, follow us at AskSlim, and any questions you have on what we're bringing you today or anything else, write to Matt at AskSlim.com. This is Trade Planning with Options. Katie is just fantastic. She's going to do analysis on AMD, which is negative, and then share an options trading idea using the Tasty Trade platform. Katie, show them this great work.
Hi, this is Katie Anagnostos. This is a Trade Planning with Options video on August 17th, 2023. Today we're going to look at a bearish defined risk short premium trade idea in a semiconductor stock on the AskSlim focus list. Many of the symbols in this sector have had a shift to negative momentum, and some of them have even broken below their short-term cycle low supports and now configuring negatively. We'll take a look at that in a moment. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, go to the AskSlim website or email matt@askslim.com. Let's get started. The symbol we're going to look at today is AMD, Advanced Micro Devices. This is the weekly chart of AMD. Now, after getting up to the top of the target zone, that's this light blue box, in the rising phase of this cycle, then we've had many weeks of sideways to downward price action. The reversal scout, that's this green and purple ribbon on the chart, that is purple, showing negative momentum, and we are projecting down to the bottom of this support zone at about $100, or if it gets below that, down to the 78.6% fib at about $92. The weekly cycle timing window runs from October 2nd to November 10th. That is the period of time marked out by these blue vertical dashed lines when we would expect AMD to make an intermediate low. This is the daily chart of AMD. We have two out-of-phase cycles. The dominant one is this blue 28-bar cycle, and we also have this out-of-phase 31-bar cycle. You can see that we are getting into the time period when that cycle is due to trough, and we may get a bounce back up into the resistance zone before getting into the declining phase of that dominant cycle. So over here we have a negatively configured cycle now, having broken below that cycle low support. Momentum in here is negative, with both the reversal scout being purple and the slim ribbon coloring the candles red. So we have a resistance zone here, these pink and salmon colored boxes. Those are declining as AMD goes lower. Right now the levels are from about 113.5 on the top to about 110 on the bottom, with a 78.6% fib up here at 115.93. Now we are projecting down to the top of this target zone, this light blue box, at 101.69 during that daily cycle timing window, which is in early September, 9/1 to 9/12. We're going to go over to the Tasty Trade platform to look at an options trade idea. First, please go to the AskSlim homepage, hover over that Marketing Partners tab, and click on Tasty Trade. This page contains a link through which you can learn more and also open a Tasty Trade account if you choose to do that. They are our preferred options trading platform. Opening an account through our link helps you with some special bonuses and also helps us, so please consider checking that out. Now over to Tasty Trade. Here are the AMD options chains. We're going to use the September 15th expiration cycle with 29 days to go. That aligns closely with the daily cycle timing window. IV rank up here next to the symbol is relatively high at 25.9. Now we're going to set up a simple short call spread, which is a bearish defined risk option strategy. There are only $5 wide strikes in here, so let's go ahead and sell that 115 call. That gives us a little room, and it's also at the top of the expected move, which on tastytrade is denoted by this vertical brown bar. So selling that call gives us a credit collected of $2.04. $204, that's max profit. Max loss on naked calls is infinite to the upside. And selling a naked call in this symbol requires capital of just over $1,100. So if you're comfortable with that risk, you can stop right there. However, I'm going to buy a further out of the money call to define our risk and lower our capital requirement a little bit. So let's buy the 125 call. So that's a $10 wide spread. It lowers our max profit to $1.38. $138. Our max loss comes down to $862, and that is also our capital requirement. Probability of profit is 78%. We get almost 16 short deltas and a daily theta of $3.06. If you wanted to lower your risk even further, you could also move that long call in to the 120 call. That lowers your max loss and capital requirement down to $413, but of course it also lowers your max profit. Let's go over to the risk graph. Looking at this risk graph, we just want AMD to stay below our short strike or below our break-even point at least, which would be, depending on where we get filled, if we got filled at $1.34, that puts our break-even at $116.34. Now, the optimal time to place this trade would be when AMD gets a bounce up into that resistance zone on the chart. You would then be able to collect more credit for this trade, or alternatively, you could move your strikes further away from the stock price. Now, our profit target on this short call spread is going to be 50% of the credit collected. So we're looking for about $65 to $70 out of this trade idea. That's per short call spread traded. That is our trade planning with options video today. We'll follow up on this AMD trade idea next week. As always, please feel free to reach out on Discord or via email to katie@askslim.com if you have any questions or feedback.
This is a hot minute. Take a look at NVIDIA. This is a hot minute. Investors' big love may be in big trouble. This is some negative analysis on NVIDIA. We'll start out looking at the weekly chart. You can see on the bottom our cycle brackets are pointing to the rhythms in this particular stock. And you can see in here that they measure the inflows right over here of money and then the outflows and the nice rhythm you see in a very bullish cycle right in here. And another one, this big rally. You see here this big upturn right there in momentum. That's our reversal scout. And that has kept this stock moving to the upside through all of this time frame until right there where we have this downward turn in momentum. And you can see in here what this is showing is there actually is not a bottom pointed to here based on this analysis until mid-October, because that's when the daily chart shows it also. So this is a negative situation where momentum has turned down. Supports over here are down between 380 and 320, and I'm thinking 320, and I will show you why, or somewhere down near that area. Here is the daily chart here, and look at that head and shoulders that is forming. And you can see the beautiful cycle action in here also. You can see these rhythms in the market. Notice this cycle right over here forms the left shoulder. This cycle right over here forms the head. And cycle analysis is how you get these patterns. And then you have this right shoulder being formed. You get underneath this level here at 403, and that points down over here to a measured move around 327. It might take a couple of cycles to get down there. And remember, we're talking about the trough out in somewhere in October. If I look at this cycle right over here, it points to October 11th is that low. So we're looking for sometime around mid-October and a move down very significantly, potentially getting down all the way near 320. Head and shoulders top forming, as you can see, and momentum giving way to negative, as you can see right in here, as it was positive through this whole period, and now has turned negative, and that resumption downward signal right there saying trouble in NVIDIA. This was investors' big love, and it's what lifted the market for all of those months. Now it's looking in trouble. NVIDIA, if it gets a bounce in here and finishes this right shoulder, I think it can move down very sharply. Trade ideas. Avi does this all the time. Of course, Avi goes through all of my work on the futures every single week, and then does Future Speak, and then goes through all of the stocks and ETFs, and he does that analysis. So he's a busy guy. And he brings this trade idea, which is just great because he refers to our ranking system, which is level 3 and 4 content. It's just fantastic. You got to watch this. You'll see what the ranking system looks like, and then it'll tell you why Win is in negative condition, and there's some trade setups coming.
Hello, this is Arvind Ramachandran. In this video, what we're going to do is we're going to show you how we use the ASLIM ranking system, which is available for level 3 members and up at ASLIM, how we use that system for trade planning purposes. Now, this is one of our original systems that we came up with, and it continues to be of great value. What's happening here is we have our symbol, which is a list of 84 of our most liquid stocks, futures, and Forex that we follow, all in a simple app here for you, followed by our bias. This is over a 3 to 6 week time frame, and it'll vary from very bullish to very bearish. And then we have the market outlook right here, which takes the technical evidence shown on the right here and summarizes it into a few word sentence to give you the core view that we have based on our both cycle analysis and momentum analysis. So it's a great way to simplify and save a lot of time. And after that, you will see our technical evidence shown here. And then finally, on the right, we have our weekly and daily charts that you can open up right inside of the app. So let's first look at what's going on in the overall market. We're clearly selling off. We have now a bearish intermediate term bias. So let's say you wanted to look for names that are in bearish intermediate term conditions. Let's go ahead and sort by the bias. So you can see this is the list of bearish underlyings based on our work, and this is the list of bullish underlyings. We're going to look at the bearish list first, and as you see here, there's PYPL, MSFT, SQ, WIN, FXI, HG, which is copper, as well as the Aussie dollar, US dollar. That's just what is visible on this list, and there are more as the overall market is clearly in a bearish mode right now. So let's say you wanted to look at WIN. What do we see here in WIN? We have a bearish but oversold directional bias. That is really very important. Let's now read the outlook. It says TE, which is technical evidence, favors a potential upside short-term rally in a negative intermediate term condition. So we didn't look at any charts yet, but this is a perfect summary for what is going on right now in WIN. Let's go ahead now and open up the weekly chart first. So I'm going to click on that, and you'll see it opens up the weekly cycle analysis here for WYNN. And this is now in what we would call a left-hand translation, where we have formed the high in all likelihood in the early part of this idealized cycle, and that indicates the highest odds would be that we would sell off for the rest of that cycle. And as you can see, this is a longer cycle that goes out into 2024. So this is a very bearish setup here in WIN. What we have on our charts is our key levels here on the downside, right around 90 and then 85. And we have our track that we are looking for on the downside with a move down into the lower 80s prior to this intermediate term corrective period being over with. So a clear bias to the downside in WYNN over the intermediate term. Now let's go ahead and move back to the ranking system and then pull up the daily chart. So it said in the outlook that it favors a short-term rally in an overall bearish intermediate term condition. That's exactly what we are looking for based on this daily cycle analysis as well. There's a low that is due right around now in the overall context of a lower daily low versus the old low. And based on that, we would look for a lower high to form in this next rising phase and for a rally into this 100 to 105 area in red, followed by a lower low going out into that next low, which is due in the later part of September. So you have a great sense for our levels on the upside, along with our timing for that next low here in the short term in WIN. And all of that was right here for you in the ranking system. So it's just a fantastic app and is available for our level 3 members and up at Ask Slim. As always, if you have any questions or comments, feel free to send me an email. Thanks again, and I hope you guys have a great day.
Stock market analysis, but first, see our analysis and huge content. This is our special trial offer for Level 3, education and analysis and support for traders and active traders and investors. And take a look. Just go to the top of the SLIM website, front page, and you can see our tons of content that we're offering. Just click on that link at the top of the front page or write Matt at AskSlim.com. You can see here where that's pointing for you to click right up there on the web page on the top, and you will then be able to see the information that's in here. 35% off a trial membership for 3 months. That's only $77.33 a month, $232 total. And if you just want to get a peek at what we do for Level 3, take a 1-month trial. We'll give you 50% off on that. That's just $59.50 versus the regular $119. This is a great offer, and you will certainly benefit from the massive amount of work that we share with you and education. Take a look at that. You'll love it. Stock market analysis and projections for the S&P 500. First, take a look at this important information. Make sure you read this slide. It tells you about how we approach our analysis and what that means for you as you begin to apply it. If you've scrolled forward, please note that in this show, in my opening comments, there's great stuff for you to hear about my thoughts on the markets. And earlier in the show, Katie brings trade planning with options, where she gives you a trade setup in AMD in options and shows you our analysis. I bring you a hot minute on NVIDIA. You don't want to miss that. And Arvi brings you a trade idea in WIN. So in case you scrolled forward or you're only watching a clip of this show, go back and watch those important parts to this show. All right, stock market analysis. I'm going to use the mid-cap as a guide for our overall negative picture for the stock market. Now, we have been negative. You know that. We have looked for the stock market to enter into a period of risk that we believed would begin sometime around mid-August. Well, here we are now in mid-August, and the little rally that we were looking for, the one more time to the upside, didn't materialize. And I'll show you why. It's about the huge negative momentum that we see in the market right now and how that suppresses the shorter term rallies that we were looking for. That can happen when you get into periods where momentum changes swiftly. And that's happening right now. We call those swamping conditions, and you'll get an idea what that means. The first, I want to take a step by step here. We're going to look at the mid caps because we're looking for a guide to help us now, because these suppressed cycles are harder to read. So we need to look at other indexes and ways that we can get information. Then we'll transpose that over to the Russell, because the mid caps, the MDY and the Russell, trade similarly. It's important to look at those. And then we'll look at the S&P 500, the SPX, the daily and the weekly chart. And then I'm going to show you the momentum conditions in our MCM. So this is a pretty involved piece right now, and I think you're going to find it very interesting. This is the MDY. This is the mid cap, and we're looking at weekly analysis in here. And this is phenomenal. Excuse me. You can see, looking at this, that there is a rhythm in this market that is very identifiable. And that is what cycle analysis is looking for the rhythms of money flows. And you can see that right in here, how clear that is. On the bottom, of course, are our cycle brackets. And these are the harmonic families, and there is a dominant cycle and a minor cycle that is showing up in here. Sometimes there's 3 minor cycles or even 4 in the harmonic family, and sometimes we have 2 brackets on here or 3 brackets on here, and sometimes even 4, depending on really what's showing up. In this case, it's very clear when you look at these cycles that there is a dominant cycle and a minor cycle. You could see the minor cycles are smaller, as you see right in here, and then the minor cycle right here. What this looks like to us is that the mid-caps are going to decline out over here in towards October, and I'll show you that on the daily chart, and that is giving us a negative indication. Also, what's important for you to see is that each time the reversal scout turns down here later in the cycle, in the second minor cycle, it sets up a decline through the end of the cycle. You can see that right over there, and you can see that right over here, and here it turned down right there, just in the last week or two. That says that through the end of this cycle, and the end of this cycle is way out over here, which takes you into 2024, there is trouble. Now, it might be that this minor cycle turns down and then you get another upturn, as you see right over here. And sometimes the upturn makes a higher high and sometimes it does not, as you can see here, in a more negative cycle. It depends on how far this falls, but right now the projection is to fall down to about another 14 points. That would be about another 4% right over here, or down here to 445, which would be 26 points, which would be another 6, 7, 8% down over here in the MDY into this October time period. So this is a negative condition for the mid caps. That says that there are probably somewhere between 7 and 9 weeks or so still to fall. Now, when I switch over to the daily chart, look at this phenomenal cyclicality that's in here. I mean, if you want to really understand the timing in the stock market, you can see that right over here. And when I look at the cycle patterns, that is right here, you can see both the minor cycle right there and the dominant cycle should trough in between these 2 lines that we have here. And that's where it's getting right now, and a trough is due. However, based on what I showed you on the weekly pattern, it suggests that this next cycle will be to the downside again. Yes, there's rising phases in here. This is likely to give you a bounce, and there's some bounce potential in the stock market, and then moving to the downside again. And the next trough ends in October, as we see noted right over here, and I can highlight that for you here, and it tells you that the next trough is, well, at the very end of October, November 1st. So that really gives you an indication, as we showed here, that that low is probably coming towards the end of October right there. We have it pointing to the 10/30, October 30th right there. And those potential large declines is illustrated there also, and I'll show you the side-by-side here so you can see the weekly and the daily, for those of you that are students of psychoanalysis. So now I'm going to switch over to the Russell, because the MDY is really important when we look at that on the Russell, because it overlays so closely. Remember, the Russell is small caps and the MDY is mid caps. And what this shows us is that the trough that we're looking for in the mid cap, so the mid cap is green right over here, comes at this time frame that the Russell is likely to give you a bounce also. But look at this cycle right over here, how negative that is there. And let me just zoom in so you could get a closer look here. And look at the momentum conditions. The slim ribbon, which kept you bullish throughout this whole period. You can see it here on the slim ribbon PO. And each of these upside resumptions warned you that momentum was going to head back to the upside. And then it turned neutral, and now it's turned negative. That says to us that this bounce that looks like it's coming right now, and the Russell is up here on Friday, is likely to continue for some brief period of time, some number of days, potentially getting to 1908 over here, but this is a sell zone, and this is declining. It might actually be a little lower already because this is lower, because this is falling. So momentum negative, the cycle configuration is negative. Both of these, or all 3 of these, the minor and the dominant in the MIDI, MDY, and the Russell, making making its low timing right in here and a potential bounce. And that says to you that look for a bounce and then look out, because this is likely to be falling again sharply. This takes you down here until September. The next one over here takes you down into October. And we're really looking for some fairly negative situation here in the stock market with some minor bounces based on what we're learning now from the MDY and from the Russell. So now I'm going to switch over to the S&P 500, SPX. Now remember that we were looking for a bounce, and that bounce did not materialize because of the severe downside pressure. Here's the daily chart, and I'm going to come back to that in a second, but I want to be on the weekly chart right now. And there's that period of risk that we talked about for so long in that yellow zone, and the market moving down sharply. The warning came right over here as the reversal scout turned down, and generally when the reversal scout turns down, you continue down through when this cycle trough comes. The daily chart points to mid-October before the cycle troughs come. And in the beginning of the show, and if you didn't watch it, you should go back. There's so much in there. I talked about the fact that we were downgrading this and that we could see a decline of as much as 13%. That would be somewhere down here under 4,000, 39.75, which is this 78.6% level right over here. Our original thoughts was that it would get down somewhere between 6 and 8% right down in here, and right now down to I think 5.7%. And the market still under the best case probably stops here at 4,200. But there's a potential here at 4,100, and then this decline over here at 39.75. One other thing that I did say in the beginning of the show is that we never want to be an alarmist nor a doomsayer. That's not our style. We just simply do whatever the charts tell us. And when we get a sharp magnitude and a big decline with a lot of time to go, it warns us that the lower supports could get hit. So we're not looking for, a huge decline right now. And remember, if it's only this like 10 to 13% right in here, that's a very normal correction in a bull market. So it's very likely the case. But when you get into this kind of alignment, big downside magnitude and negative momentum, anything can happen on the downside. So the window is open for declines down into these levels that we're pointing to. And if it wants to get worse because there's some panic in the market, the time between now and the end of October would be the likely time that would happen. It's not our analysis. The worst case we see now is 10 to 13% on the downside, which is a downgrade that we put in here from our original thoughts that this period would be more like 6 or 8% to the downside. Still a very significant period of risk. Let's go back to that daily chart here. And what we were looking for, and what a lot of people were looking for also, was the rebound in this period right over here. And that would normally be what would happen. But I showed you that steep magnitude of decline, and what that does is it swamps the rally in here. We could not get that uptick that we were looking for, and we thought it was a high probability that we would test the high or get close to it. But then things changed. And you can see that what we have is this condition where this cycle came, the momentum turned to negative here. We got that resumption signal 4 days ago to the downside. And then it just absolutely collapsed in here. A lot of selling. Now, it's trying to get back to even here as I'm doing this recording here at midday, but there may not be a lot in here. Where are the resistances? Well, it's down here at 44.25, but the slim ribbon often gives resistance as it gave support over here. So the rebound could come only maybe to about 4,400 to 4,410 and then begin to turn down again. So the expectation would be at the end of this cycle, this minor cycle here, it would move down to this level at 43.06. But now I have to say that this area over here at 42.08 is a pretty good probability. We'll just give that a nice red line for you to see, which is more likely of a probability. So we're looking for a decline over here, and this yellow zone over here is where this would accelerate on the downside. Now, let's take a look at that Russell that we were looking at. So here's where that little Russell low was looking for, right there, as we showed you on the Russell chart. And so the Russell is the green dash bracket, as we show you here, and that is likely to give you a lift right into this area. That if that came to that 44 to 44.10 with an outside here at 44.40, then I believe that you get into this zone over here where the minor cycle and the Russell cycle are coming down and have another large selling wave that would come here out into mid-September. Then you have to deal with the next period out over there, which is going to be the real period of risk out into the beginning through middle, second, third week of October, where there could be some very hard selling out over there also. So that would be this cycle here giving you an upside bounce, and then this cycle, these cycles here, giving you this next minor period of risk, which would be significant on the downside, and then another bounce, and then another very significant period of risk out into that mid-October period. So what I showed you in here is first looking at the mid-cap and showing you how those cycles are beautiful and how those call for a little short-term bounce soon, and how that goes on, goes onto the Russell chart. And you can look at those, and they trade fairly close together because they're mid and small caps, and that makes sense. And then put that over onto the S&P 500, which is under huge pressure from the intermediate patterns, preventing any real upside movement. Very likely going to see some attempt to the upside in a minor way. 4400 to 4410 is a reasonable, very short-term target, and then moving again to the downside. Now, I want to switch over to the market conditions monitor because this is so important to look at. I want you to see the short-term patterns in here. We're on the time frames mode right over there. You can look at it in time frames mode or trader mode, depending on if you want to look at the particular style of trader that you are. And here what you can see is that back on the reversal scout back on August 3rd gave you a negative signal. This slim ribbon confirmed on that again on August 15th. Here you can see the QQQ August 3rd, August 11th. Here you can see the IWM August 4th and August 15th. So these are when they were giving you those negative signals on the daily or the short-term charts. Now, if you were more of a shorter-term even trader than that, you could have gone to the 2-hour right there, and you could see that they were bouncing around a lot, but they're certainly been in significant negative mode for quite a number of time in here. And if you look at the IWM, that's way back to August 2nd when it was giving you those signals. So we have warned about the momentum turning negative, and you can see how important that is. On the weeklies, you can see in here what we have is still that we have situations that are mixed. It hasn't really given strong signals yet, though we're just beginning to get them, that the intermediate is deteriorating. Let's switch over to the trader mode right over here, and you can see what we're looking at. We're looking at a short-term trader. You know, that's you're a swing trader, option trader. That's the kind of time frame that we're looking at in here, and you can see that this is under bearish conditions also. So this is just a fantastic app, and you can get this several different ways as a standalone or becoming a level 3 or 4 member. So that's really important to look at when you see this. You really can gain a lot of information looking at this great app. So if you want to see that what some of the other key stocks are and the conditions they're in, you can see them right in there. You see Apple bearish, Adobe bearish, AMAT bearish, just a lot of really negative things. things. And there's a few things that are still bullish in here. The dollar, of course. Amgen is holding up as bullish, and there's not a lot of bullish stuff here when you look at that. So basically, when we look at the trade setup condition, you can see there are quite a few that are very bearish, and you see the indexes, and they are bearish. So great app, and our algorithm is built in here, and it's very helpful for you to use this. So I wanted you to see that. I think it's important when you look at that. That's just great stuff. And if you want to get that, all the information I just showed, you can do that by taking our level 3 special. Just go to the top of the ASLM website, click that sign up now button. You don't sign up by hitting that. You get a ton of the information of what you'll be getting, and 35% off for a 3-month membership, 50% off if you just want to give us a try for a 1-month trial, and you'll get everything I just showed you in some variation for you to look at. Just a massive amount of information and analysis and education that we will share with you. So great deal. Make sure you take advantage of this special. That's it for the show. Please do go to AskSlim.com and sign up for level 1, $45 for 3 months. If you're brand new, you'll love that because you get stuff from us every day. Subscribe to our channel here on YouTube. Like the video by giving it a thumbs up, and watch our member videos in the playlists. Follow us on X at AskSlim, and any questions that you have, write to Matt at AskSlim.com. That's it for this show. I want you to be so careful because it is so crazy out there. And I'm always wishing you great trading.